Good morning, gang. Good morning, good afternoon, good evening, or good night, depending on where you are in the world. Welcome back to this week's Bitcoin update. First and foremost, remember nothing discussed today is financial advice. It's for educational purposes only, and it's my view of the markets. Now we've got that out of the way, let's take a deep dive into the Bitcoin chart and talk about what I'm looking for next in terms of setup and direction. So before we get into that, big shout out to today's video sponsor, PrimeXBT. If you don't know who Prime are, they are a crypto exchange, but not only can you trade crypto, you can also trade FX, commodities, and stock indices. And if you do use our link down in the description, you can get up to a 7,000 USD deposit bonus. So if you do want to check them out, links down in the description, and they are a non-KYC exchange. Now that's out of the way. Right, we're going to keep this short and sweet this week because there's not a right lot to run through. Nothing has really changed from last week's update. So what we're going to do is we're going to bring on the visible range volume profile, and we're going to move the chart over, and we're going to talk through this. So really simple analysis, what we've got going on right now. Effectively, as it stands right now, we are stuck between two key levels. This is one key level. This is the other key level. Obviously, we've got the all-time high, and we've got this week low, which is also marking market structure on a higher term time frame like the daily. Okay, well, we are in between these two levels. We are mid-range. Okay, and as I've explained to the guys on this morning's update, and I've been talking about it all week, I'm not really interested in trading in the middle of this range. Scalps, intradays, possibly, but for any decent form of setup, for me, there's nothing within this. Now, I am still holding positions from lower. I am still holding positions from higher. But within the middle of this range, I don't have a high probability setup. So what I want to see ideally is, let's talk about upside first. If we can flip 70.5 to roughly 71k, so this zone here. Now, again, you've got people that like the order blocks, supply and demand, all that good stuff. Again, I don't really care what you want to call it. It makes no difference to me. All I know is if we start to flip this zone here and start to clear above 71.5, 71.6, then realistically the probabilities are that we create a new all-time high. Now, up at all-time high, there's a couple of things here. Now, you guys know I've got a sticky zone just above here, going up to roughly 77k. Now, this is on the Bybit chart, by the way. Each chart is slightly different, but it's roughly around 77k. So up at the highs, I'm either interested in, do we get a simple swing failure pattern, take out the stops from here and start to turn around, and then once again, can look just to continue trading this range until one side gives way. Which side breaks, we don't know. And I'm not going to hold up a crystal ball and claim to know something that nobody knows. Okay, so if we do that, that'll be my first option. Now, if we start to go up higher, I am still cautious. I wouldn't be longing a breakout here because I don't long breakouts. I don't trade breakouts full stop. I'd prefer to take the reverse trade or no trade at all. So if we do come up higher, then as I said, we've got that number roughly around 77k that you really need to pay attention to. If we can start to flip that, then we can start looking up towards 80k. Absolutely fine. Now, to the downside, if we start to come back down to these range lows and grab all this liquidity down here, and ideally take the liquidity from these lows, then I'd be interested in taking long trades. Once again, I would want to see that liquidity taken, then see some strength on the back of it. Now, what does strength look like? Well, either in the form of the order flow, seeing a load of trap traders down at the bottom before a reversal, and a great example would be the low that happened yesterday morning. We came down, we run the stops of these lows here. And what happened as we run the stops, we had a load of excess down here, longs getting stopped out, new shorts coming into the market. And what happened? Price started to reverse. And that's what I'll be looking for if we do come down here. On the flip side of that, if order flow doesn't give us anything to work with, then we can look at very simple market structure. Okay, so I'd be very interested in taking a trade down here. Now, what happens if we lose this level and we start to break down? Well, once again, I wouldn't be shorting here, because why would you short range lows? It makes no sense from a risk to reward point of view. Plus, the overall first target's not that far away from there. So if we do start to lose that and start to break down, then first and foremost, looking at the volume profile, where's the bulk of the volume? Well, we've got a high volume node here. roughly around 51.7, give or take. So I'd say this 52 down to 50.7. Okay, effectively this cluster here, this range here left a volume footprint. Again, people will call this an order block, supply zone, demand zone, whatever you want to call it. It makes no difference. What I do know is there is volume here. That's what's important. If you have a cluster like this and no volume, it's not that important. This is where certain types of traders go wrong. This is why volume is key. It's the only true form of technical analysis that we have, because we can see what's going on. Okay, so if we do start to come down here, then I would be interested in taking a trade from this zone here if it gives the setup. Once again, if it just comes in, I'm not going to blindly leave limit orders in here, because what's the point in doing that? Because it could just go straight through. It could. So what I want to do is I want to see what happens when price comes in here. Do we get that sign of strength? Do we get that example like we said here with the order flow? Do we get that market structure shift? Yes, in that case, I'll take a trade. If not, then I'll look down lower. And then if we do come down lower, well, it's pretty obvious where I'll be looking for a trade. Okay, it doesn't take a rocket scientist to figure this out. You can see where the point of control is. This whole zone here, this range that led to the breakup, is where most of the volume is, which is why we've got the point of control down there. So if we do come into this section down here, and once again start to show some strength, then I'll be looking for longs. If this doesn't hold, then we'll look for lower prices. Okay, this is breaking it down really simple. Okay, this is only one part of my TA that I use. And that's about it. That's about it. Obviously, if you do want to learn all the types of TA that I use and how I find confluence with overlapping TA, which then creates the stronger setups, then check out our website. The link's down in the description. Okay, this is what I teach, and a hell of a lot more than this. Hopefully you've learned something today. Hopefully you're not getting chopped up in the middle of a range. If you've enjoyed today's content, hit that like button. If you're not subscribed, consider subscribing. And until next time, gang, as you were, bye-bye.